Good day, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Thursday, February 11th, 2021. Now remember, we have President's Day coming, so tomorrow's an important day because you have abbreviated trading in futures and probably nothing in the stock market. I got to look and see if the markets are open in stocks. I know in the futures we have early closes, so my guess is they are. And pay attention to that. I'm a futures broker, so I watch all what's going on there. So we'll open our normal time Sunday night in futures, trade until about noon, and that'll be it. And then we reopen at 5 o'clock again. And it's pretty much back to normal. Grains and some of the meats, sometimes they open that night. I got to look and check that. Sometimes they pass it to the morning. I'll check it and know. Okay, let's go back to GME. AMC down, and the high gave up today. You had a big break, $6.50 off the high, and you gave up a lot of action there in THCX. So, you know, you can't go in a straight line. That's the way to look at it. As for the rest of the markets, PAVE still carving out, making the higher highs that I wanted to see. And when we talk about it, you can see it right here. Now, if we look at yesterday's range, in at 22.49 to 22.16, you took that out and you closed higher. So a warning sign would be when you have that going up like that. If you take a look at it, there's your bar chart. Now let me get it for right here. When you get that, if you take out this low, what it does is, I call that a bull trap. So after a market gets a big rally and you have an outside day up, if you take out that low, it's often a sign the market wants to retreat. I also call it a bull trap. And the market looks to get back to the closest moving averager or Bollinger Band under it. Well, when we look at the moving averages, I can tell you the Bollinger Band's going to be down here. It would be the 2195 area. Does not mean I'm right in my thinking. It's one of the rules that I use when looking at charts. Let's assume the market wants to keep going up and not take that out. Okay. What's wrong with 2306 as being one of the upside targets, which is the upper Bollinger Band. Now, along the way here, there's going to be some other. I can see that just visually right here, you created what's called a window envelope, and I'm not putting it on the chart for you. I do that for my paid subscribers early in the morning on my SPDR ETF and on my futures. I do them about 2.5 hours apart. I start at 5:40 in the morning with the futures, and then I do the SPDR. I start recording it at 8:40. I get the first 10 minutes of trade into the market, let all the noise come out of it. Then I start the recording, and it's in my people's hand before 9:30 a.m. It takes about 20 minutes to record, 15 minutes or so to render, posting time where it gets onto the website, you know the game. But it's pretty quick. So I look at that. That would be one of the things I'm looking at. So I'm still friendly. I'm in the bull camp. I look at momentum. I'm scared. It's overbought. Not even trying to embed. So it's a sign to me that it'd be ideal if it can continue up there, but you're already in overbought territory. All your horns should be up, being aware. It's been a nice run the market's had. THCX. So how many days did we have in a row over the upper Bollinger Band? Now remember, futures typically don't exceed 5. You did have just now, the crude went 6. It's rare. Go back in a year and count how many of those happen. Write me. Here you got 1, 2, 3, 4, 5, 6. I don't care what you're going to tell me. I say it's on borrowed time. It's a rubber band that's going to pull back. Now, it does not have to crash. It is a sign of extreme strength that it did that. So now you're getting the pullback in the market, but there is a negative here. I want you to take a look again. How many days did we have with the Bollinger Band? I'm sorry, the slow stochastics were both numbers were over 80. Certainly we had that on Wednesday's close. We had that on Tuesday, and we had that on Monday. We had that on Friday, not the day before. Okay, so the market's been embedded. If you lose that reading, and I'm going to get you right up to date with where it's got to be, and there we are, and that finishes under, I'm going to take you to yesterday, anything that I'd see under a 79, I went out. I don't wait for the close all the time. You're down today to 63, 68. You think you don't have layers that you can be coming out on during the day? I cover that in my new charting course, the enhanced version. How to read that, by the way. So, and I know people have a question, but these people made a nice money. I think they're sidelined. I think you wait to see what the next move is going to be. A lot of volatility, I can tell you that. But to me, a 68 reading is going to be real hard to bring it back and embed it. I would not play that it's going to do that. It can only re-embed the next day to get both numbers back over 80. It can happen. I wouldn't play for it. SMH just hit the upper Bollinger Band. Ring the bell. What are you supposed to do the first time you hit an upper Bollinger Band? Ring the bell. Take some money off the table if you're in a move like that and say, hey, the odds are 95% of the time I'm going to stay within those bands. If it wants to go, I'll move my stops up accordingly, but I'm not giving back a chunk of money. And why did that move today? It's moving because President Biden got a letter, rightly so, from our U.S. big chip makers, and they're telling him, hey, President Biden, are you aware that the U.S. doesn't make many of the chips that we use in everything? 12%. I read that today, so don't hold me. I don't make these numbers up. It was down from 37% when we were doing that under the Trump administration. Now we're at 12. Do you honestly think that that's right, that everything, our cars, name an appliance you have that doesn't have today in it some type of chip? I don't know. I even saw these things you plug in the wall for the floral scent. They have chips in them now. Whoa. So I think that there's something here, and I think you're going to get the president's attention, but that shortage on itself is bullish because you're giving it market credence, and there you go. So that's what the market's doing. Is the market overbought? Oh, you betcha. It's not even trying to embed. So I think you got to be a bit careful. XLI, the market set back today. So now you had been going up, higher lows, higher highs. If you take out the low right there of Tuesday, you break the uptrend, and it's exactly what occurred today. So now you've got a pattern of a higher high and a lower low in an overbought market. I think the smart money's just going, okay, that is the end of that run. Doesn't mean you have to go down. Let's see what it has later. Same thing happened today in the XLE, in the energy. Take off today's action. These are vertical price moves, and when you get these vertical moves, when they end, I've learned in my career, and it does not mean I'm right, you've already milked the market for most of it, generally speaking, and you're approaching that Bollinger Band. I'm on the lookout, and that ended the trend. I think a lot of traders would say, okay, talking to their broker. Now, so many people trade by themselves. What they do, I can't begin to tell you. If I trained a room of 10 brokers, they'd tell you what I just said, because they'd be taught in my philosophy. Lower low, higher high, outside day down. So you snap this market, you create what's called a bear trap if you take out the highs of Wednesday. If you take that out, my theory is, doesn't mean it's going to happen. My theory is the market could make a run to the 337.98, the upper Bollinger Band. If you get over it, my out is, if you get back under that low without doing it, I want no part. I'm just plain wrong in the analysis, okay? You have the embedded reading, so I like what I'm seeing. EFA, same thing, outside day down. Yesterday's high was, 79.93 today, 75.93, I think it was. Wait, let me just see. 75.93. And today's 75.90. So you didn't quite get through there. I'd like to see it do that. And then again, I wouldn't want to see Wednesday's low violated. It'd be a so long. GLD. I've told you I expect a battle at the line in the sand, the 18-day average of closes. Why? Because that's what the market often does at that number, especially when you've come from a Bollinger Band. I've also been saying without today's action, if it keeps going, I expect to see layers of resistance between the 200, the 100, and the upper Bollinger Band. So what did the market do? Now you have a lower low, higher high, bias down, momentum lost its upside thrust. You haven't re-entered a downtrend, but you've left that uptrend at this point. You can get it back, but you have to close over yesterday's high. Not today's high, yesterday's. Outside day down in GDX. So I love outside days down. That number one ends that uptrend. You had higher lows, higher highs, it's over. Now you've got a higher high. When you take it out, you left that trend. To get the market and capture people that are a bit bearish against this 18-day average, which is where the market often churns, you got to take out either on Friday or Monday the highs of today. Then I'd look for the 3610 level. Barring that, just more churning as I see it. TLT. All right, we've had a contra-trend rally in a market is it embedding. So both numbers are under 20 today on the close. They were under 20 on Wednesday. Come on, give me the other setup here, please. They were under Tuesday, and I know they were under. There you go. So they've been under. So you've had them under, which tells me that what rules the day? Not the swing line when that happens. When you have an embedded reading, the swing line goes right to the back of everything. It's no longer the important part of the technical rules that you had at the beginning. When you start with a trend that isn't embedded, you're looking first at the swing line, and off the swing line, you're using filters on it to see, can you get in via it? When you get an embedded reading so long, it takes the back seat of it because momentum rules the day. And when momentum's lost, you go back to the swing line. So right now, still very bearish. You probably catch the bears if you get through today's high. If you don't, and I say that because then I'm looking anyways for the 18-day average, and that might be enough to lose that. I'd be on the lookout. But you have fresh meat here that got long. Could you be going back to 147.46? Last, FXE. This whole rally hasn't been strong enough to get up through that 114.04. All you've done is you've got lower highs, still lower lows, found great support where we talked, left an oversold condition, and now the market is near, not there. You don't have a reading over 70 yet, near being overbought. You probably are ready to do some pullback unless you get a piece of news overnight that helps this market accelerate. Accelerate's got to carry through 1404. Even then, you've had a pretty big run. So as friendly as I am down the road, the euro versus the dollar, which I am still on longer term charts, I can see the problem that's right here. And that brings me to two things. Number one, if you like what I do with you here, at least if you're watching YouTube, give it a like. That helps us get more people to go, why is his count going up, and so on. The other thing is you might want to take a look at what Modern Trader put out. This is a brochure that they created called Profitable Trading Strategies in Any Market. And it's a cool piece. First of all, price action trading. Do you even know what that is? So why not learn about the basics? It's a technique. Then you get how to trade with it, all right? Trend trading. Well, I think you know the flat base pattern. I'm sure you don't. But you do because I talk about it in a different way. Remember when we say you're going into a pipe on Bollinger Bands? The theory is very, very similar. Then Caliber, American Crowfoot, and 10 Rules. You know, you see this all the time, and they're always fun. But the name of the game is learning. And the name of the game is learning enough where you know what you want to use and not. I had a talk with a gentleman the other day, and I wrote him. And I wrote him 2 sentences. He keeps writing me and telling me, oh, he's looking at this, looking at that, and he keeps telling me all the things he's familiar with, and it dawned on me. He looks at so many indicators that all he can get is conflict. You got to learn to filter out indicators. You don't need 3 different RSI versions. You don't need MACD and slow stochastics and ADX all at the same time. All right? You don't need regular moving averages and exponential moving averages at the same time. You got to make decisions as to which ones fit into the methodology that you want to use. You want to use them all, fine. Let me tell you my experience of 51 years. You put enough noodles in the soup, and it's no longer chicken soup. All right, that's what happens. So if you want to see more of this, go to our website under what? Free offers, take advantage. We'll get it right to you. I'm Ira. You have a good day.